All right, ready to jump into another deep dive.
Always. Let's do it.
So today we're looking at Apar Industries and their second quarter performance for fiscal year 2025. Got a whole bunch of reports here. And
Yeah, looking forward to digging into those.
yeah, and Apar Industries, I mean, they're global, right?
Sure, they're a big player.
Aluminum conductors, transformer oils, even the top cable manufacturer for renewables in India.
Yeah, impressive stuff.
Definitely sounds like a company to watch.
Absolutely.
So let's get into these numbers. The revenue for Q2 FY25 came in at 4,645 crore.
Wow, that's
Yeah, pretty substantial. And then operating profit of 357 crore.
okay.
PFP, profit after tax, 93 crore.
So putting these numbers into perspective, Apar Industries has been delivering really good profit growth, averaging 44.1% over the past 5 years.
That's impressive. And looking at their EBITDA margin, 8% for this quarter.
Yeah, that's a healthy margin, especially for a manufacturing company.
Right.
Shows they're managing costs well, pricing strategically.
Must be doing something right to hold that leadership position.
For sure.
Now, let's talk cash flow. You've flagged their free cash flow,
Yeah.
635 crore. What's driving that?
Well, strong free cash flow is a good sign, right?
Absolutely.
Efficient operations, smart financial management. Apar's working capital management is probably a big factor here.
Interesting.
Their cash conversion cycle is just 32 days. They're turning inventory into cash quickly.
That's efficient.
Yeah.
Okay, let's move on to some key ratios. First up, PE ratio of 42.4. That's a pretty high number.
Yeah, it is. A PE ratio that high suggests the market has high hopes for Apar's future.
You think it's justified?
Well, it's something to dig into a little deeper. We need to see if their growth trajectory can actually support that kind of valuation.
Good point. Next, the debt-to-equity ratio. Looking at their balance sheet, total liabilities of 10,124 crore, total equity of 4,067 crore. Puts their debt-to-equity ratio around 2.5. Is that a concern?
Not necessarily a red flag on its own. The question is, how are they using that debt?
Yeah, good point.
If it's fueling strategic investments, R&D expansion, it could actually be a sign of smart growth.
So we need to look into the specifics of their debt.
Exactly.
All right. Next up, interest coverage ratio. Operating profit of 357 crore, interest expense of 101 crore. Interest coverage ratio for Q2 FY25 sits at around 3.5.
So that tells us they can comfortably cover their interest expenses with their operating profit. A ratio of 3.5 is a good indicator of financial stability.
Okay, good. No trouble making interest payments. Now, let's talk about ROCE and ROE. We're seeing an ROCE of 44% and an ROE of 26.8%. Those are some really strong numbers.
Absolutely.
What's the takeaway here?
Well, both ROCE and ROE are key measures of profitability and efficiency. An ROCE of 44% is exceptional. They're getting great returns on the capital they're using.
Okay.
And the ROE of 26.8% shows they're effectively using shareholder investments to generate profit.
So all these figures point to a company performing well. But what about the people behind the numbers?
Yeah, the ownership structure.
Let's look at their shareholding pattern.
That's good.
Data shows promoters hold a pretty dominant stake in Apar, 57.77% as of September 2024.
Yeah, concentrated ownership like that can be a good thing, can be a bad thing.
How so?
It can provide stability, alignment between management and shareholders.
Right.
But we need to look at the promoter's track record, their transparency, commitment to minority shareholder interests.
Makes sense. And it's not just about who owns the shares, but how they use their influence.
Yeah.
We're seeing FII and DII holdings steadily increasing, especially since September 2022. What do you think about that trend?
That's a positive sign, definitely. Institutional investors are pretty savvy.
Yeah.
They do their homework, so their growing interest in Apar suggests as they see value and growth potential there.
Another layer of validation for the company's performance, right?
Exactly.
So we've got this interesting mixed dominant promoter holding and growing interest from institutional investors. But before we get too deep into the ownership structure, I want to circle back to a couple of other performance indicators, specifically PAC to CFO and asset turnover. Let's dig into those after...
Actually, before we jump to those ratios, I think we should take a look at Apar's trade receivables.
Oh, good point.
Give us a better understanding of their working capital management and cash flow dynamics.
Yeah, you're right. Got to connect all the dots.
Exactly.
So let's explore those trade receivables first. Then we can loop back to the PAT to CFO and asset turnover ratios.
Sounds good. So trade receivables, this is basically the money that Apar's owed by its customers, right?
Right, for goods or services they've already delivered.
Exactly. So if that number gets too high, it could signal some potential problems with collections.
Which could obviously impact their cash flow.
Yeah, exactly.
So what's the situation with Apar's trade receivables?
Well, as of September 2024, it's sitting at 1,200 crore. That's up from 950 crore in the same period last year.
An increase like that could be a little concerning. Does it mean they're having trouble getting paid?
Not necessarily. There could be other explanations.
Like what?
Could be higher sales volumes, maybe changes in the credit terms they're offering customers.
Right.
Or even just delays in payments because of the broader economic climate,
Yeah, that makes sense. So how do we figure out if this is a real problem or not?
Well, we could take a look at their debtor days, see how long it takes them to collect payments on average.
Okay.
We could also look into their credit policies, see if anything's changed recently.
Right.
And comparing their trade receivables turnover to the industry average would be helpful too.
Okay, so trade receivables, definitely something to keep an eye on. Now, let's get back to those other ratios you mentioned. PAT to CFO and asset turnover. Starting with PAT to CFO, what does that tell us?
So PAT to CFO, it compares profit after tax to cash flow from operations.
Okay.
Basically, are those profits actually turning into cash?
Right, making sure the cash register is ringing.
Exactly.
So for a PAT, what does that ratio look like?
Well, their PAT is 193 crore, CFO is 635 crore. So that gives us a PEAT to CFO of about 0.3 for Q2 FY25.
Okay, and what does that tell us?
It means a good chunk of their profit is converting into cash flow. Generally, that's a positive sign.
That's good to hear. Solid cash flow is important.
Absolutely. Essential for growth and stability.
All right, now for asset turnover. What's this one all about?
Asset turnover basically measures how well a company is using its assets to generate revenue.
So making the most of what they have.
Exactly. How much revenue are they generating for every rupee invested in assets?
All right, so what's Apar's asset turnover looking like?
We can calculate that by dividing their revenue, 4,645 crore, by their total assets, which is 10,124 crore. That gives us an asset turnover ratio of around 0.46.
So they're generating about 46 pays in revenue for every rupee of assets. How does that compare to the industry?
Well, ideally, we'd want to compare that to Apar's historical ratios and the industry averages to get a complete picture.
Right.
But generally speaking, a higher ratio is better. It means more efficient use of assets.
So maybe there's room for improvement there.
Could be. Maybe they can optimize production processes, streamline their asset base a little bit.
Interesting. So they're doing well overall, but maybe there's some opportunities to squeeze a little more out of those assets. Now, before we move on to the shareholding pattern, anything else that stands out to you? Anything from these ratios or any other data points we've looked at?
Well, one thing to remember is that while Apar's profitability ratios like ROCE and ROE are really impressive, their PE ratio is also very high.
Right.
That means the market has high expectations for future growth.
Right.
So it's important to think about whether their future performance can really live up to that.
Yeah, good point. Got to balance the excitement of their current performance with a realistic assessment of what's coming next.
Exactly.
All right, so let's finally dig deeper into that shareholding pattern and see what we can learn about the dynamics between the promoters and those institutional investors. So we've got this interesting mix, right? Promoters with a big chunk of the company and these institutional investors steadily increasing their holdings. What do you think? How's this going to play out for Apar?
Well, it's definitely something to keep an eye on. Strong promoter involvement can be a good thing. It can bring stability, a long-term vision for the company.
Right.
But it's important to see how open they are to input, maybe different perspectives from these institutional investors.
Yeah, because those institutional investors, they're not just sitting back and watching. They're known for being pretty active, engaging with companies, pushing for better corporate governance, making sure shareholder value is a priority.
Exactly. And as their holdings in Apar grow, they're going to have more say in those strategic decisions. It'll be interesting to see how that shapes things going forward.
It's almost like this balancing act, right?
Yeah.
You've got the experience and the vision of the promoters, but then you've also got this scrutiny and maybe some fresh ideas coming from the institutional investors. Now, while we've been focused on the numbers, the financials, the ownership structure, let's not forget about the bigger picture here.
Yeah.
Apar's role in this whole renewable energy sector, that's a big deal.
Huge. And their position as the leading cable manufacturer for renewables in India, that puts them right at the center of this global energy transition.
It's a massive opportunity, right? The demand for conductors and cables in these solar and wind energy projects is just going to keep growing. Do you think they're ready for that? Are they well equipped to really take advantage of this?
I think they're in a pretty good spot. They've got the manufacturing capacity, the technical know-how, the relationships in the industry, but, there are always challenges.
Like what kind of roadblocks are we talking about?
Well, managing those raw material prices, especially aluminum, that's going to be key. And we already talked about those rising trade receivables, so keeping a close eye on their working capital management, that's going to be important too. And of course, you can't forget about the competition. It's a dynamic market, always changing.
So it's this mix of opportunity and challenge, right? They've got a lot to gain, but they can't just sit back and relax.
Exactly. They need to adapt, innovate, maybe even look for new growth opportunities within that whole renewable energy ecosystem.
All right, so to sum things up for our listeners, we've taken a deep dive into Apar Industries' second quarter performance for fiscal year 2025. Strong revenue, healthy margins, solid cash flow, those are all big positives. We've looked at those key ratios, highlighted that high PE ratio, and the need to really understand their debt levels. And we've explored the dynamics of their shareholding pattern, which is pretty interesting to watch. The future looks promising for Apar, especially in that renewable energy space.
Absolutely. But as with any investment, it's all about making informed decisions. Keep track of those upcoming quarterly results, see what strategic moves they make, and how they handle those potential challenges we talked about.
Great points. And for our listeners, we'll leave you with this. As Apar navigates this exciting but complex landscape, what kind of partnerships might they form? What innovations might they pursue to really solidify their position as a leader in the renewable energy sector? Something to think about as you continue your own deep dive into Apar Industries. That brings us to the end of another deep dive. Thanks for joining us. We'll catch you next time with another fascinating company and a fresh stack of data to unpack. Until then, happy investing.